everybody. Welcome. You are very, very welcome. This is one webinar that you have enrolled to. We are in the EY webinar, which is co-hosted by the KEEP Council, the Kuwait Italian American Business Council in Kuwait. I am Maria Angela Capello. I am the president of the KEEP Council in Kuwait. And I would like also to introduce the chairman of the ABCK, Frank Belonos, who is also chair of the American Chamber in Kuwait. Hello, Frank.
Hi, Maria. Thank you very much. I also would like to welcome everybody from ABCK-AmCham Kuwait and from the Kuwait Italian Business Council for this another great event. I'd like to thank Alok and Ernst Young in advance for this outstanding briefing that we're fixing to have. And I would also like to thank everybody else that has briefed in the past and are already scheduled to brief, that have all stepped up to help all of our business community in the midst of this crisis that we're facing right now. Please visit abckw.org and our social media sites to see what other events that we have going on and see what our organization is about. And if you're not a member, come please join us. Make sure that you also please like and share our posts. And because if you share these posts, we can reach out to more people that can benefit from this information that's being put out to everybody. I'd like to thank everybody again for joining. And Maria, thank you very much for this, working together on this. This is going to be a great event, and thank you, everybody.
Thank you very much, Frank. That is fantastic. And as a matter of introduction, we are very proud of holding this webinar exactly in these challenging times. It is the pride of the KEEP Council as well to welcome all our allies into the webinar. And I will echo Frank's petition. Remember to repost our news and flyers in Instagram and other channels that will help us to grow. As you know, the Italian Business Council is just less than a year old. We are just growing, and we partner with the American with a lot of joy. So today, let's go into the matter. We have a very interesting webinar, which title is COVID-19 and Beyond. And this is given by Alok Chugh. I would like to introduce Alok to you. Alok is a tax partner and head of the tax service line for the Kuwait office. He is the client service partner and tax advisory partner for a major multinational company in the oil and gas sector and financial services sector, leading the government and public sector tax practice for EY across the Middle East and North Africa. He has been involved in advising governments across the region on tax policy and regulatory matters. With over 25 years of experience in advising multinational clients on the Kuwait tax law and assisting clients with fulfilling tax compliance obligations in Kuwait, he holds a leadership role in representing various foreign companies operating in Kuwait to comply with their taxes. He has been consulted by various governmental organizations in Kuwait on the practical ways of implementing the regulations in Kuwait, including the Ministry of Finance and the Kuwait Direct Investment Promotion Authority. He is constantly called to give webinars. Very happy to host this online. So Alok, the Zoom is yours.
Thank you, Maria. Thank you for the lovely introduction and the bio. Appreciate that. Hello, everyone, and Ramadan Kareem to those of you fasting. It's a pleasure to speak to you all. I would have certainly loved to speak in person to everyone, but unfortunately, because of this situation, we're having to host this through a webinar. I hope I hope not actually that everybody is getting used to this new way of doing business and working from home, because I'm certainly not enjoying it, and I certainly hope that I'm able to we're all able to get back to leading our normal lives and and business at the earliest. I want to sort of once again thank American Business Council, Frank, Maria, Alberto at KIB for organizing this event, and really appreciate the time and the opportunity being given to talk to you all. The objective, of course, is for me to sort of share with you, like the phrase says, COVID-19 and beyond. And I'm sure you're listening to a number of these webcasts and webinars over the last few weeks through your organizations that you're working with, and there's so many other sort of webcasts being hosted by consultants and experts in economics, etc. So I'm trying to sort of bring to you EY's perspective on how things are going to shape up beyond COVID-19, and obviously my flavor on and my analysis on some of these aspects that we're looking at. So without further ado, I will move on to the agenda. This is what the agenda looks like. I'm going to touch upon the global economic disruption that we are seeing, including analyzing some of the factual information which is being posted out there, and sharing that with you. Also, we'll share with you the economic stimulus packages that have been announced by governments across the globe, and more specifically touching upon the economic stimulus package coming out from the US, from Europe, Italy, and then moving on to the region that we are looking at, including Saudi Arabia, Europe, including Saudi Arabia, Dubai, and Kuwait, etc. And then move on to the tax policy and administrative responses that the governments have come up with, and in order to provide some of the concessions to various taxpayers across the region, and then sort of try and conclude on what it basically means to all of us, to us as business people, to us as finance people, as tax directors of the organizations, what is bothering them and giving them sleepless night at the moment, and try and summarize all of this and see what are the areas that need to look at, the kind of solutions that are available out there to sort of support their respective organizations. My objective is to finish it in about less than 45 minutes. So we have about 30-35 minutes now. So we are already about 10 minutes into the session, and then hopefully allow everyone about 15 minutes to address your questions you may have. My request is, of course, please do, if you have any questions during the course of the session, do post them on the chat. So Paula, from who's helping us coordinate this, will be able to sort of make a summary of that. We'll try and address all these questions towards the end, and if not, of course, my contact details are there, and feel free to reach out to me subsequent to the session, and I'll be happy to address them. So very quickly, moving on to this slide. Now, this sort of slide is a quite a sort of depressing slide, to be honest. But we have to face the reality. So this sort of summarizes where we are and what's happening. We all know that there's been impact on the people and their lives and the lives and livelihoods of the people. There are health crises being faced in multiple countries, the financial crisis, the collapse of commodity prices, and they're all interacting in a multiple ways and impacting the overall sort of GDP and the economy of the countries. But if I were to sort of try and very quickly show you the slide on the side, if you see, this shows a comparison of what happened during this lockdown period of 2020, and when we compare ourselves to financial crisis of 2009. So our economy has sort of gone down, or expected to go down, and this is coming out directly from our IMF report, that we will shrink by about -3%, or our GDP will be a -3% for the period of 2020, as against projected growth of about 3.3% back in January. So in less than 2 months, we are down by about 6.3% in our GDP growth, and that obviously, when we compare ourselves to 2009, where we saw a 0.1%. So this is the biggest sort of financial crisis that we are facing right now, compared to the Great Depression or even financial crisis of 2009. In dollar terms, IMF projects that our economy is going to shrink by about $9 trillion during the course of 2021, and we hopefully we're going to see some spike during 21. And that obviously means, comes or depends a lot on how the governments are able to address this issue. Whether we're going to see that in 2021 or we're going to see that coming back in 22 or 23, it obviously depends on how governments are able to address the issues on hand. I think one major point that I'm sure everybody's hearing about this, the phrases around V-shaped recovery or U-shaped recovery or extended U-shaped recovery. And once again, that depends on how fast the governments are able to sort of move on and support the economies. This sort of slide expands what I've just said in certain ways. So when we look at, and I'm going to sort of talk specifically about certain economies. Now, when we look at on the left-hand slide, the US economy. Now, it grew by about 2.3% in 2019, and it's expected now to grow to have a negative growth of 5.9% in 2020, and that's the projection as of now. And then as per IMF, if we have a V-shaped recovery, then we're probably going to come back to about 4.7% growth in 2021, and which obviously is very, very it's obviously doubtful, and we're going to see how, wait and watch and see how it is going to develop. But then we talk about the European region as a whole. It's 1.2% and minus 7.5% and then 4%. And Italy in particular, 0.3% was the growth in 19, and it's going to drop down to minus 9.1%. So and hopefully come back. And we talk about the Middle East area on the right-hand side slide. If you see, the growth expected was, or growth in 2019 was 1.2%. Now it is expected to have a negative growth of 2.8%. And obviously, all of us sitting here in this conversation, and everybody out there, especially the small to medium enterprises, the businesses that who are seeing the significant impact of this, will have issues around the continuity of the businesses. Once again, the governments have tough choices under the circumstances. I'm going to use the word. It is a choice between whether you're saving lives of the people or the livelihoods of the people. And obviously, when we focus on livelihoods of the people, obviously the expectation is that you come back to normalcy as soon as possible, and the businesses start functioning the way they were, and so that the people don't lose jobs and are able to sort of start working again and start earning the salaries, etc., and earning the bread for the family. But then obviously, again, the choice is between saving lives and livelihoods, and that's where the dilemma is right now for the government. If we sort of go to the next slide, this sort of slide summarizes in some way the sectors which have been impacted the most and to the lowest on the right hand side. So if you start from left to the right, tourism and hospitality, of course, is the biggest. This sector has seen the biggest impact. I can probably, for those of you who don't know, at the moment I'm locked down in the US currently, so I'm speaking to you from here, and I've had personal experience in terms of actually hotels being shut down, and I've been asked to sort of move out from the hotels because they were shutting down the very next day, and on two different occasions. And then obviously aviation, airlines, and then oil and gas. Oil and gas, of course, has not necessarily seen the brunt of this COVID-19, of course, because the demand has shrunk all of a sudden. But then we all know, we had other dynamics playing into this, where the issues around, Saudi Arabia and Russia, etc., where we had the stalemate, which has been resolved partially, but then obviously it's going to see its impact in due course of time. The other sector that I particularly want to sort of touch upon is obviously this government and public sector. Now, like I said, this is one sector which is obviously impacted in more than one ways. One way is, of course, where the governments are expected to sort of support and are expected to pull up their socks and support the businesses, support the citizens of the countries, and try and put up with some framework, etc., to under the circumstances, and then stimulus, etc. But then, other than that, obviously, this government as such also has the responsibility to continue with the development of the infrastructure, development of the policies and the regulatory framework, etc., and then also focus on saving the people who are working in the government and public sector to sort of continue to support the businesses. So it is something which it is something which is the most dynamic and vibrant situation, especially with the government and public sector when we are talking about this. And I'll probably not sort of touch upon the other sectors, but I'm sure you're experiencing that on a day-to-day basis. I think the one other aspect of this, now this is what the governments and the policymakers are sort of having sleepless nights about, and they're talking about it in the kind of ways that they are going to support the economy. So if we start with support of health services was the first one. That was the single foremost task of the governments when they started supporting the hospitals, providing necessary facilities, the nursing staff, the doctors, and the other healthcare services and support services that they needed to be made available. And some various countries are in different stages of this effort. And then it moves on to global emergency funding, again in terms of stimulus packages, the kind of monetary policy measures that they've taken, multilateral corporations. Of course, I'm sure some more than one country, actually, and multiple countries in Europe and other parts of the world have tried to sort of collaborate together and come up with ideas and framework on how they are going to be able to sort of support and cooperate together to deal with this issue. And then obviously supporting the vulnerable group, etc. I think one effort, of course, is to boost the morale of the people, is in terms of communication, in terms of how maybe political leaders sort of come out and communicate with their respective constituencies to provide solidarity, etc. And of course, on the lighter note there about, if political leaders come up and say, I'm going to forego my salary for a period of time to sort of support the economy. I'm not sure if everybody's doing it, but yeah, that is something which obviously is something which is going to help the economies. And then, last point, which is again all important of this, is creating public-private partnerships. Obviously, we can't rely on the governments to do everything. It's never going to happen. So sooner rather than later, and when we go post-COVID-19, there is going to be no choice left but to sort of create these public-private partnerships where businesses, private businesses, and public at large will have to also support the governments and cooperate to sort of make the necessary changes in the and make the necessary sort of developments and changes in the frameworks to support the economies. Now this next session, so I move on to the economic stimulus. This slide basically sort of talks about what US did in the last few weeks. They've come up, since the beginning of March, they've come up with 4 directives which have been issued to support the fiscal economy and of the countries. As of now, if you look at it, there are about 2.98 trillion of stimulus packages have been introduced by the government. Most recently, of course, the day for yesterday when they approved the Paycheck Protection Program, which is going to be signed off in the form of a legislation by tomorrow, which is about 484 billion. So roughly 2.98 trillion of economic stimulus package there, and which means about 14% of the GDP, which is not too far from, I think the largest, if I recall the numbers, is Japan, who brought in this economic stimulus package of about 20% of the GDP. So 14% is obviously a good number in dollar terms. Then aside from that, there have been other monetary stimulus, and Federal Reserve has introduced, and these are largely to create liquidity in the market and provide additional funding and loans, etc., to people and the stressed businesses, so they are able to sort of continue with the business. And the most recent one, again, on 9th of April, where they provide additional actions to provide 2.3 trillion in loans to support the economy and the small to medium businesses, etc. And then again, some points about issuing government bonds to sort of create more liquidity in the market. If we move on to Europe and Italy in particular, so on the left-hand side, if you see, well, this is what European Central Bank did. They've came up with the additional net asset purchase program, which is about 120 billion euros, and then subsequently another one which was came up subsequently for another 750 billion, and then the banking economic and the European Central Bank also issued another monetary measures for them to oversee and help with the reclassification of the non-performing assets and loans, etc., so that banks are given a lot more flexibility in terms of how they are able to lend to the ultimate businesses and deal with the situation. And on the right hand side, if you look at Italy, there were two decrees that have been issued. One was Heal Italy on 17th of March, which provided a stimulus package of about 25 billion and to the economy, and then subsequently another one on 8th of April for additional packages, including deferral of taxes and delayed payments for taxes and social contributions, etc., so that people are able to sort of deal with this situation that they have on hand. Moving on to our region, GCC, Bahrain, and obviously around similar stimulus package, and they're pretty much, very consistent across the region. And if we talk about Bahrain, $1.5 billion of, which is about 4% of the GDP package or stimulus package was given. It was announced last month. And then another interesting point on that is that the interest rates have been brought down from 2% to 0.7%, 75%, and lending rate has come down from 4% to 2.45%. And Oman, by the same token, also has announced a $20 billion stimulus package to support the economy, and again, creating and bringing the interest rates down and lending, etc., to provide, including waiver of, and that I believe is also consistent in Kuwait and other countries, Qatar also, you'll see, where they're waiving payments of or deferment of installment loans and waiving of interest and any profits that they were charging from the borrowers for a period of 6 months. Qatar, like I said, again, similar package, which is about 13% of the GDP that was announced, and another, and the reduction in the interest rates, etc. Saudi Arabia, about 70 billion Saudi Riyal, package to support and the economy financially, as well as delayed in tax payments and fees. In Saudi Arabia, they've delayed the tax by about 3 months. And I've got separate slides where I would specifically talk more about the tax concessions that are being given by the governments. UAE, again, similar sort of package where about $7.2 billion, which is about 2% of the GDP, a stimulus package was announced. And then most recently, if you look at it, the interest rates have come down by about 1.25%. And also another $70 billion package, which was announced subsequently in the last couple of weeks, where and it's coming indirectly in terms of again creating more liquidity, where they're reducing the reserve ratio, the cash to reserve ratio for the banks, so that they're able to lend more to the economy and provide more lending to the government. Coming into Kuwait, again, I'll touch very briefly. I know we've had a couple of sessions in the recent past, including, one from Citibank last week, where we touched upon this latest central bank regulations, etc. But the story is no different. And to be honest, when I analyze it, I think Kuwait has done a reasonably good job when we compare ourselves to some of the countries in the region, in terms of not only creating additional sort of in terms of dollar terms, the increased amount of funding, but also making some more micro level changes in terms of each of these aspects. We obviously know that that the implementation of has always been an issue in Kuwait, but I'm hoping that this time around, with this special situation that we have on hand, it will be implemented at the earliest. I think I will sort of skip this couple of bits, but I do want to sort of address this most recent resolution, which was passed about 10 days ago or 2 weeks ago, where they created additional special funding for the small to medium enterprises. And again, like I said, very clear definition of what a small or medium-sized enterprise is and how they're going to benefit. But two ways the businesses are being supported or expected to be supported: one through the national fund, and the other one through the banks. If I just sort of summarize this one, the interest rates for this additional lending, there'll be an interest rate of 2.5%, which will be charged, but it'll be fully borne by the Kuwait general budget. So the businesses will not be able to sort of will not suffer this. The cost will be borne by the Kuwait general budget for the first year, and for the second year, it will be borne 50-50% by the general budget, by the Kuwait government and the borrower, and the third year it will be fully borne by the borrower. And this funding will come jointly from the Kuwait National SME Fund, which is about 80% will be funded through there, and then 20% will be funded by the banks. This sort of summarizes what I've just said in terms of interest rates. So if I were to, look at it and do a quick calculation on this, we're looking at roughly about 0.5% of the interest, which will be borne by the government and in each of these scenarios, which is quite a sizable percentage in overall terms. I will move on to the third part of my discussion, which is on tax policy and administrative responses. So just like fiscal and monetary stimuluses that have been announced by the governments, similarly, the Ministry of Finances of the respective jurisdictions also have come up with some tax measures to support the taxpayers in the respective jurisdictions. So if I were to look at Oman, they have come up with a regulation to delay the payments of taxes for a period of 3 months. And then they have granted extensions in timelines for payment and allowing payments of tax in installments, and then timelines for resolution of objections, assessments, etc. have been extended as well. And Qatar, by the same token, has also announced somewhat similar sort of guidelines: 2 months extension for tax filings, and then also for any delayed payments, the legislation provides for 5% interest to be charged on that. That has been that is going to be waived up until the period of 31st August 2020. Similarly, interest rates have come for repayment of have been reduced, have been brought in for 1%, have been reduced from 1% to 0%. I think Saudi Arabia, if I may say, I mean, they were perhaps the first one and most active in this frame for coming out with this framework for providing concessions to the taxpayers. and again 3 months concessions and delaying in payments of zakat, income tax, excise duties, and also VAT, payment of VAT has been extended by about a period of 3 months. I think they've also, UAE, if I were to go with that UAE market, they reduced their fees for the government fees for hotels and other market fees and service fees that they're charging, that have been reduced by 50%. And customs duty for all the goods that are imported into UAE, and that's an important one, for all goods that are imported into UAE and being used in the UAE, the customs duty has been reduced, and they'll be refunding 1% of the 5% customs duty that are being paid for a period of up until June 2020. And that there has been also extension in payment deadlines for VAT payment. In Kuwait, unfortunately, we're still waiting for a formal legislation to be announced. It is still sitting with the Council of Ministers and waiting for a formal approval from their side. But what we are hearing, and that a draft has been prepared, and it's most likely going to be approved, because it's been approved at a couple of levels already, where they will give an extension in payment of tax by 2 months, and installment payments, etc., will be extended by a period of 2 months from the date Kuwait reopens. So if Kuwait was to reopen in beginning of May, we are looking at a possible timeline of 2 months from then to be given to the people to pay for their taxes. And similar concession of 60 days being granted for any objection cases or any appeals cases which are there with the government. So with this, if I just, this sort of slide sort of in some ways summarizes, what CFOs and financial managers of the organization need to worry about from a tax and economic perspective for their businesses. I mean, and more so around tax. And I pose it in terms of questions, and for all of us to sort of think, whether we are sort of aware of these changes, and most importantly, also, are we taking advantage of these concessions and benefits that are being given? Do you have so a question like, the third one over there, do you have adequate resources in place to meet the upcoming revised deadlines, and are you able to sort of deal with this situation, or do you need further time from the authorities, and are you able to approach them, or are you able to track all these tax and finance regulatory requirements that are changing day by day? And with all these concessions, obviously, and I will cover it in my subsequent slides, where and each such change obviously means a new regulatory framework which will be coming up, which will have an impact on the business. And another important one, of course, here is the number 7. Now, this is obviously an important one, and I've sort of had discussions with a bunch of our clients in this regard. Just like me, there are many other organizations who got people locked down in different countries, and they're not, or maybe they're not able to hold board meetings, or they're going to host board meetings in different locations for that very reason. Now, this, from a tax angle, does have permanent establishment risks and tax risk arising in these jurisdictions, maybe from a corporate perspective, but also personal perspective. If an individual has had to stay in US for a period of, say, 6 months, it automatically creates a taxable presence for that individual, and also creates wider tax implications for the organization as such. And I'm giving US as an example, but Europe is much more stringent in that respect, and Europe and many countries in Europe could be impacted as well. So again, businesses have to, and tax heads do have to think about it. Then there are also implications around all these exceptional costs that the businesses are incurring because of COVID-19. Are you going to be able to claim a deduction for these exceptional costs that are suffering? How do you sort of present them in your tax returns, etc., to be able to take, to be able to claim those genuine expenses that you're going to be incurring for your businesses? Are you able to sort of deal with the revised capital structures? Number 10, if you see on that, with all this liquidity situation that is arising, with this additional fundings being given by the government or the compensations, etc., being given, each of these situations will potentially have some, tax implications arising for the businesses. And have the businesses considered them? Have you considered the tax and the legal implications of the debt restructuring that is going to happen for the businesses? Again, a question to be asked. And now, aside from tax, obviously, if we look at, these are few other changes that are going to impact businesses across the globe, and and which again CFOs and the finance managers and the business heads we have to worry about. First and foremost, of course, going concern and liquidity, and that's the single biggest ask at the moment for any head of treasury or CFO. Where are you going to create liquidity for the business, and how are you going to create that, and how do you best manage the treasury function, and so that the business is able to continue. But that's as far as the actual business operations are concerned. But then when we talk about reporting, now according to the International Financial Reporting Standards, there is a requirement and there is a disclosure that has to be made on the financial statements of the businesses, whether the business has a going concern. Are you able to sort of continue with your business with the revised and liquidity position or the current liquidity scenario? And similarly, impairments of non-financial assets. Now, there are a lot of companies or businesses who have got non-financial assets, and those financial assets have been, the valuation of those businesses have come down, or assets have been impaired. So again, a disclosure needs to be made on the financial statements about this. Contract modifications, we all know, and I'm sure many of you are experiencing it already, where the contracts that you had previously negotiated with your vendors, with your contract owners, etc., will need to be renegotiated. The terms will need to be renegotiated. And again, this requires a disclosure to the regulators in terms of whatever impact or the financial impact of these contract renegotiations that are going to happen. Fair value measurement is the biggest challenge that is going to happen as of now for anybody trying to value the business in the current environment, because the valuations have sort of gone down significantly, and how do you sort of value that, and then of course disclosures around it, and similarly disclosures around whatever support and government that you're getting from the governments. This is a kind of a slide which we as EY have put together various trackers and thought leadership that is available on almost on a real-time basis. So by all means, all of you can feel free to sort of log into these trackers, and you can see whatever latest tax policy changes or controversy changes are happening, or any changes that are happening on labor and employment laws, etc. And you're able to sort of track the developments that are happening around this on a day-to-day basis. Heading into the last section of my presentation, I know I have about 5-7 minutes more, and then I'll sort of go back to Q&A. So then, obviously, as the name obviously suggests, and I would like to relate to the discussion that I was having just now about the nightmares that the CFOs and the heads of tax are having, and then obviously many of you based in the country who are heading certain projects and contracts for the governments, how these changes are going to impact you for now and for the future, and the kind of solutions and opportunities that exist around there. So over the next 2-3 slides, I'm going to sort of discuss some of these changes. Now, first of all, of course, we talked about the tax policy changes and how the whole tax operations of the businesses are expected to change and are being impacted. So we talked about tax policy changes, like the stimulus packages and the benefits and the concessions being given, and as of now, these are all obviously coming as concessions. But then each of these, when we try to sort of move on, the next phase obviously moves on to the compliance, because obviously any such change is also going to have a ramification in terms of the kind of compliance and the additional reporting that will arise from this. And the third one, obviously, is the tax controversy or the issues with the tax governments and the regulators or tax authorities 1 year or 2 years later, when after you file the tax returns and you sort of and the tax authorities are actually auditing your books and recording and looking into your records to see looking into your compliance, and that's when the controversies will arise in terms of how you may have interpreted a particular legislation or the policy, and how the tax authorities are sort of going to interpret it and look at it. Like, for example, many companies are going to suffer huge losses, and multinational companies, and there may be a situation where a particular subsidiary located in Europe may have suffered more loss than an entity located or the project located in Kuwait or in the Middle East region, for that matter. And how are the tax authorities going to look at in terms of the funding for that subsidiary, or repatriation of funds out from that entity, or transfer pricing that companies may have taken advantage of, and then permanent establishment risk, when I was talking about presence of those people in those jurisdictions for a longer period of time. So there are multiple issues that could arise in terms of residency, compliance, permanent establishment, and so on and so forth. And then obviously on the right hand side, if you see the kind of solutions and opportunities that are there, and obviously the smarter ones are also going to look at it as an opportunity in terms of how they're able to sort of take advantage of these policy changes, how they're able to take advantage of how best they manage circumstances, and then obviously deal with these international tax controversy issues. And I can tell you, we are talking to a bunch of our multinational tax clients across the globe in present times, in trying to help them structure all of this and for the future as well. Another impacted area, of course, is head office and corporate structures. So the impact is not necessarily only at the entity, at the policy level, like I said, in the big or the controversy or the compliance, etc. But then obviously at a much broader level, where even the corporate structures of the organization may need to be revisited. Like, for example, companies are creating more liquidity to try and deal with the shortfall, and this liquidity is at the head office level, and then it sort of trickles down to more stressed subsidiaries or assets in different locations, and how that funding goes from other locations. It could be in terms of actual funding from the parent company to the local entity, or it could be in the form of charges that are coming out from head office, and where they do some transfer pricing of all these costs suffered globally, and then those costs are recharged in 2 different locations in different projects. And the third one, of course, is what is the effective tax rate that the entities or the organizations may be paying. Again, solutions around this in terms of how best you manage the cash repatriation from one location to the other, so that you don't suffer any transfer pricing risk or suffer any withholding tax. How do you manage such charges that are going to be coming from head office to local entities in terms of royalties or other management fees and so on and so forth, so that you're able to sort of take the maximum advantage of the situation, and of course, more importantly, safeguard the losses that the entities may be suffering. And each of these points that I've talked about obviously have, there are a bunch of provisions within the laws of respective countries. We've all heard of BEPS and transfer pricing initiative of OECD, and they're already thinking about COVID situation now, and they're going to come up with some more regulatory framework around it, so that companies do not abuse the legislation, are able to and they can sort of track in terms of the full compliance. And similarly, from a withholding tax perspective, we are expected to see some changes around this also. And then we are going to see potential changes in terms of how what kind of provisions might be introduced in the respective tax legislation in terms of deductibility of some costs and of these intercompany charges and finance charges by the tax authorities. The other impacted area is obviously treasury and capital and funding. We've talked a little bit about this. Funding, of course, it depends on the duration of the project or duration of funding, and and whether it is going to be for a short period or a longer period, and depending on that, what kind of implications could be arising. I mean, it could be arising in terms of transfer pricing. Again, it could be in terms of withholding tax on interest payments, and if it is interest-free from parent company to the local entity, a deemed notional interest could be charged, and that's what is provisioned in most of the countries at the moment. But how it is going to be interpreted, of course, by the tax authorities when it reaches that stage is, is something to be planned for and watched for as a head of tax. Recapitalization of subsidiaries, again, and it's an important point because many of these subsidiaries who may be loss-making and companies may be recapitalizing them, and that obviously brings out a tax angle automatically, because in certain jurisdictions that immediately means a deemed funding or a deemed debt structuring for that, and then impact on whether you are meeting the debt to equity and thin capitalization rules in that particular jurisdiction, or whether you're in compliance with the tax efficiency and withholding tax implications in those jurisdictions. And similarly for debt restructuring for bad debts, etc., then again, there are tax rules around on bad debts, and when you restructure them, obviously immediately there comes in the tax implication. Another important aspect, and I'm sure that is very, very high on the agenda of most of the CEOs and CEOs of the organizations are transactions. And there are many businesses that are going to be shut at the moment, so we're likely to see a lot more M&A happening in the market in terms of businesses being acquired or merged. And likewise, and on the seller side, companies may be sort of selling some of their assets and distressed assets under the situation. Again, with all of this situation, there is going to be expected sort of tax considerations around it. So I think that in a nutshell summarizes what I had to share with all of you. Like I said, it has changed our lives in multiple ways. We've all been dealing with a situation where relying on the governments to deal with the healthcare issues, who was trying to support the citizens, etc., and businesses through the stimulus packages. But then at the same time, we as organizations and as CFOs and as CEOs and of the organizations and the project directors of the organizations based in Kuwait and other places need to assess how we can take the best advantage of and maximum advantage of these tax and regulatory changes, of these stimulus packages that are being announced, but keeping in line the potential tax and controversy issues that could arise around this, and looking into the solutions and the opportunities that might be available to deal with the scenario. So I will leave it at that, and I'm happy to take any questions that you might have. I think we have close to about 10 minutes left. And if you, Paula, maybe you can help me out if there are questions already on the chat box. Otherwise, feel free to raise any questions on the microphone.
Hi, Alok. Yes, actually. So thank you so much for such an insightful presentation. And we do have a few questions. So in regard to the slide on impact of the crisis being different per sector, someone asked, where is education in those industries being impacted? Right.
So the education, of course, is an important aspect, and I'll start with sharing my personal experience, because I've got, and that's one of the reasons why I'm here, is both my kids go to universities here, and the day one this lockdown announced, the universities were shut down, and all the educational institutions went on remote learning. That obviously meant huge burden on creating this online sort of method for the students to learn. but also creating a framework and in terms of providing technology support and all the logistical support, and for the professors and to sort of write their lessons and write their exams and tests, etc., that need to be done, and everything sort of all of a sudden moved online. So that is one impact of the sector. But then other bigger impact, of course, is because of this lockdown and students working remotely, the whole infrastructure of these universities, etc., has been impacted significantly, and be it in terms of tuition fees, be it in terms of the housing fees, and then obviously the infrastructure around the universities got impacted significantly. So that again sort of plays a very important role. So I think I hope that sums up and gives you an understanding of how this sector has sort of been impacted.
Yes, thank you. And then we have another question in regard to the finance and tax function in the current environment. Someone asked, what entities need to be considered in impact of these legislative changes on accounting for income taxes?
Right. Okay, great question. So, and obviously it is widespread. I mean, it's not only at the level of the branch or the subsidiary located in Kuwait, for example, or Europe or wherever, but it has to be considered at the group level first. It has to start at the group level, where most of these multinational organizations do have a certain type of finance and tax infrastructure already, where the teams and tax function is there. There are policies and procedures these teams follow in terms of how they deal with the finance and the tax matters on a day-to-day basis. Obviously, and then the clear directions and have to come out from that at that level. But then obviously, for those of you who've got infrastructure to support at the subsidiary level or the Kuwait branch level, have to filter and feed in that information of about these stimulus packages or of these regulatory and framework changes that are happening on a day-to-day basis. So you're able to sort of take maximum advantage of the situation. And I touched upon, repatriation of funding, first of all, coming from head office to Kuwait location, likewise repatriation of funds going back, renegotiation of contracts that are going to happen in Kuwait, and then some intercompany charges, transfer pricing, royalty charges, management fees, etc. All of these are interrelated, and they and obviously a proper tax function will be able to, and finance function will be able to sort of analyze all these implications, assess what's happening on a day-to-day basis, which is why we put together all those trackers so that people can see actually on a almost on a real-time basis changes that are happening globally, address the issues in the respective location, and look at the opportunities and solutions that might be available.
Okay, and now we have another question. What are the requirements in changing the liabilities from insurance contracts if we talk about IFRS 4?
So what we're talking about is, so obviously whenever the contract negotiation takes place, renegotiation takes place, as far as IFRS is concerned, it requires any impact of this contract renegotiation to be reflected and disclosed separately on the financial statements. So for example, if you had a contract with the client which based on a certain terms and conditions up until 2019, but then in good faith and good business terms, etc., you're able to sort of renegotiate the terms of that contract now. With the IFRS requires that the financial impact of this renegotiation in terms of the terms of the contract has to be highlighted in the financial statements and has to be disclosed in the financial statements. And that applies across the board to all contract negotiations, whether it is including your rental contracts, including your vendor contracts with any of the vendors, and the insurance contracts as well.
Okay, now someone else is asking, has there been any housing rental support given to expat by the Kuwaiti government?
Okay. Good point. Actually, not that I understand. There has been rental support being given for a period of 6 months for all commercial organizations who are paying rents to the government government entities, but it does not extend at the moment to the private sector. Or even to the housing and homes, etc. There was an announcement by the Minister of, I think was a couple of weeks ago, where and I don't think it has been supported by any form of a directive at the moment, but it does talk about delayed payment of rent for a period of 6 months. How effective it is and whether it is being truly applied in practice is something which I won't be able to confirm. But I mean, but there are businesses who, or there are individuals that I know of who've reached out to their landlords, etc., and have claimed that. In some cases, obviously, it's being done mutually for whatever period they're able to renegotiate. But I don't know the legality of this, to be honest.
Okay, thank you so much, Alok. And I don't think there's any more questions in the chat.
All right. Well, thank you, Paula. And I'm still available. I think we have a few more minutes left. So if anybody has any questions, feel free to ask.
If you can ask, if you can answer very quickly, you ranked the touristic and hotel industries as the most impacted ones, with the oil and gas on the 3rd place. Do you think that kind of ranking will be shifted if you analyze, for example, a country like Kuwait?
All right, no, very good point, actually. I think obviously, maybe I forgot to mention that this is obviously the situation at the moment, and we see the impact as a current date, where we've seen the hospitality and the sector being impacted the most, and because there's been a lockdown everywhere. So and there is no travels happening, etc. And then second largest was the airline and the air transportation, etc. Of course, our region, of course, if we look at it, oil and gas is the biggest driver for the economy across the region. Depending on whether it is Saudi or Kuwait or UAE or Qatar, etc., it contributes to the economy to the extent of 90 to 95% of the economy in each of these locations. So oil and gas sector does play a very significant role. I think but if you look at the current oil prices and the levels that we're surely not at the level of 70% or 60%, $60 a barrel, etc., as the situation was, a couple of months ago. But as we assess it, this sector is still able to sustain at the current levels, also $16 to $20, etc. So I think there are still sort of long-term contracts that countries have had, and Kuwait has had contracts for sale of their oil for a period of time. Of course, there are renegotiating the terms, renegotiating the prices there, but in terms of business and the continuity of the business is still there, and it's still the governments are still able to draw a reasonable amount of revenue coming out from there. So from that sense, yes, it is currently although it is still stressed, but it's better than the situation that we have for the hospitality sector. But yes, of course, it is an evolving situation, and we might see, if it continues for a longer period of time, we may see a much more serious impact on the sector in due course.
Someone asked, what is the effect of COVID-19 on transfer pricing tax?
Right. So, like I mentioned, the OECD at the moment, as we speak, actually are looking into this because, for the transfer pricing, there was this directive which was issued for base erosion and profit shifting, which was issued a couple of years ago, and many of you may be impacted already, where businesses have had to prepare the policy and the framework around this in terms of how they transfer costs from one jurisdiction to another jurisdiction. And with this changes that are happening, and obviously the aspects that I touched upon in terms of deemed interest on this debt restructuring, or on royalties being charged, or and repatriation of funds, etc. Obviously, all of these situations do lead to a potential impact around the governments or the OECD looking into this as a proper as a transfer pricing issue, and this is required to be, and this could potentially have a tax implication in that respective jurisdiction. Now, these changes to address these type of impacts, we're likely to see some changes arising in this legislation post-COVID. It's not come out yet, but I'm certain that we will be seeing something around this in not too distant future.
Okay, thank you so much, Alok, and thank you to everyone who participated. Again, thank you to Alok and Ernst Young for collaborating with us, both AmCham Kuwait and KIB. Thank you for joining us this evening and for your contribution. And again, thank you to all who participated. If you would like to become a member of our chamber, please contact us at membership@abckw.org or go to our website at abckw.org. And you can also follow the Kuwait Italian Business Council on Instagram, as they also have several initiatives just like we do. Again, thank you so much and have a great evening.
All right. Thank you once again, everyone. And it was a pleasure to talk to you. And feel free to reach out if you've got any questions.
Thank you. Bye-bye.
Appreciate it. Thank you. Bye.
Arrivederci.
Thank you.
Thank you very much.
Thank you very much.
Thank you. Thank you. Bye-bye.
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 Bye.
Bye-bye. Thank you, everyone.
Thank you. Goodbye.
Bye, bye, bye.
Thank you. Bye-bye.
Thank you, Alok.
Thank you. Pleasure, Alberto. Thank you.
Let's go.
Ciao.
Thank you, Alok. Great event. Thank you.
Thank you, Frank.
Very, very good. Very interesting.
Appreciate that.